Good afternoon, everyone. I hope you're well thus far, and welcome to the market outlook. In this market outlook, I'm going to be going over several different currency pairs and metals, and as well as the dollar index, to basically give my viewpoint on exactly where I think price is going to head this week, the specific areas of interest, the specific mitigation zones, liquidity pools, etc., that need to be liquidated, and basically frame a bias on specific currency pairs for the week ahead. A quick question I got from one of the members was, why do the market commentaries slash market outlook on a Monday instead of a Saturday or Sunday, or preferably Sunday? And the reason is because I like to see London and New York's price action for Monday to play out. I'm personally a trader that don't really like to take trades on a Monday unless the opportunity is very favorable, and I've got a lot of confidences in my specific bias that I can obviously look to take longs or shorts. But in saying that, I will try and put the market outlook accordingly on a weekend, this meaning the Saturday or Sunday, and upon doing so I will change the weekly schedule and fit in both the quantum trading pairs screenshot and the market outlook on a weekend, if that's something you prefer. So do give me feedback on that, as I want to give you the sort of best possible result in regards to your progression within this group. But nevertheless, let's scale into this market outlook. Firstly, looking at the economical calendar for the week ahead. So this ranging from March 22nd to March 29th. Monday we had USD news at 1 p.m. And again, that was a GBP USD trade we did take. Unfortunately, we did get stopped at break even on that, but nevertheless, I hope you retain some profit out of that, and obviously put stops at break even when it was due. But I'll talk a bit about that as we get into the charts tomorrow. Early sort of scaling into London and late London going into New York, we do have GBP news, medium impact, and then following late New York, and again there's specific time zones we like to trade, and if you haven't watched that video, it's on the Technical Tuesday and it's labeled time and price. So those are the specific time zones we like to trade. Just to quickly remind you, that's 7 a.m. to 9 a.m. for the London session, and for the New York session it's 12 p.m. to 2 p.m. For the New York session, and that time zone is GMT, more specifically the UK time. So yeah, Tuesday we do have GBP and USD medium and high impact news, so again watching out for that tomorrow. Wednesday we do have a lot of high impact and medium impact news. Again, to a certain extent this is what we like to see, but to a certain extent it's not, because what we normally see with this sort of news events, when they're back to back with one another, we just see a lot of choppy price action, and the reason I say choppy, yes, we do get volatile movements, but they're going back and forth, ideally taking out the high, taking out the low, because you can imagine how much liquidity is being built from both sides of the markets when we have this many news events simultaneously with one another. So it'll be interesting to see how price action plays going into Wednesday. Thursday we do have yen news, CHF news, CAD news, high impact. So again, going to be monitoring USD CAD, euro, keeping an eye on euro dollar, GBP news, high impact news, and scaling into Friday, coming to the end of the week, we do have medium impact GBP news, medium impact euro news, high impact euro news, and medium impact euro news. So again, euro is something we can look to be possibly swinging until the weekly candle closure. But nevertheless, now let's look at some charts and exactly what I'm monitoring this week. So starting off on the dollar index on the daily time frame, again just sort of referring back to these specific regions here. We had these relative equal highs here, ultimately had that small sell-off, and again, why are we sort of selling off here and creating lower lows, lower highs, lower lows, lower highs? Failed to create that new lower low, but what's the whole reason of this? It's really to attract retail. Not only do they see this as a double top or possible sell scenario, they also see a build up of liquidity via trend line. So this is why I sort of draw that on, as you can see how perfect those three touches came to fruition. Ultimately having that third touch, small sell-off, attracting retail to sell. Arguably that fourth touch there, we have that massive impulsive spike in price action. The manipulation of these highs and this trendline liquidity ultimately had that stop loss hunt, and upon every manipulation, there has to be a mitigation. We then saw price mitigate with this candle here, but upon mitigating with that specific manipulation, what do we have? A raid of these relative equal highs here, and upon doing so, we haven't really seen a solid mitigation of this candle here. So I would favor dollar to reach up to this big figure here, 94 big figure, and if not, possibly reaching up to the 94,500, but more favorable sort of figure will be that 9400, as is in line with that sponsor candle. If we do get up to that 94,500 big figure, I would be expecting a sweep above this prior engineered high here, and ultimately another mitigation of this sponsor candle here. So again, that's my two areas of interest on the dollar, and what I'm expecting on the dollar on the daily time frame is a small pullback to where this Pacific sponsor candle, this last down candle before the up move, that ideally rated these equal highs here. But if we actually monitor this sponsor candle a bit more, we notice this was the last down candle before the up move that ideally took out this structural high here, and yeah, ideally took out these sort of relative equal highs here, which is present over here. So yeah, that's something I'm definitely monitoring and is on the watch list. Obviously I don't trade dollar, I just use it in confluence with the USD pairs that I do trade. Again, on my watch list there is a huge amount of not huge amount, but a large amount of USD pairs, and it's important to keep an eye on the dollar. But I'm waiting for a mitigation like sponsor candle, and ultimately looking for longs on the dollar from there. And this basically means currencies such as GBP USD, Euro USD will basically have a bearish sentiment if we see higher prices on the dollar, and currency pairs like USD CAD, USD JPY, basically USD XXX currency pairs will move in sync with the dollar, and will ideally see higher prices on those currency pairs. Now scaling into the 4-hour time frame. Again, we can see just straight away how clean this sort of trend line looks. Ultimately, we have seen a sell-off now, created sort of relative equal lows here. But one thing I sort of want to illustrate as well is we have had that raid of that prior engineered swing low there. And it's quite a clean raid. And the reason I say this is a raid is because we had a fail of a candle closure below this engineered swing low here. So yeah, even just looking at this sort of full-bodied candle here, we have minimal wick on this side, but notice how the body stayed in line with the prior candles here. We literally failed to close solidly below this low here. So that's a clean raid of price, stops taken, orders activated from a retail perspective, and price shoots the opposite direction. Ultimately seeing higher prices now. We've ideally created that new higher high. Are we going to come back down now, create a new higher low, possibly at this sponsor candle here? Maybe, and that's also an area of interest to keep an eye on. But just removing the daily annotations for a second and putting on the 4-hour annotations, and just looking at this sort of price range here. So again, just drawing on my premium and discount zone to understand where exactly I am in price. Just dipped down into that discount price range, and again I say we just dipped down as we are trading into the 62% retracement level. I don't really like to take trades on the 62% retracement level, and the reason I don't like to trade it is because if you look at page 1 on Baby Pips, on the Fibonacci section, it is most retail take their entries on the 61.8 level. So what we sort of normally see is a lot of retail long upon the 62/61.8 retracement level, and ultimately have stops below this level here. So again, upon the algorithm taking out stops, it would also be mitigating with our first area of interest, which is this 4-hour area of interest here. This last down candle before the up move that ideally took out this structural high here and created this imbalanced price range here. Arguably, we have rebalanced to a certain extent with this price range here to the mean threshold, but I'd like to see a bit more of a rebalance of this whole pricing here, as we do have a small amount of inefficiency still left within this price range here. So something I'm monitoring there. Ultimately, like to see price trade back into this 4-hour area of interest. And yeah, sorry, just going back onto the point of what retail are basically doing. They're looking to buy up at the 61.8 level, so I should say 61.8 levels there, and ideally their stop will be at the next sort of fib level there. So upon taking up stops, using that liquidity, they'll then use the algorithm will then use that liquidity to send price higher. We do have this trendline liquidity here that needs to be swept, 0.1, 0.2, arguably 0.3 upon market open. Small breakout to attract people who like to trade upon market open. They sort of trade the breakouts of ranges and trend lines, and upon sort of attracting them to go short, we have that spike up or that gap up. So again, even the gaps in the market, etc., move in sync with taking out retail, and yeah, ideally liquidating those specific traders. But we also had a raid of this prior engineered swing high here. So again, liquidity has been taken upon both sides there. So we could be witnessing now a sell-off to liquidate all of this trendline liquidity. I would like to see it come cleanly below this first point of the trend line, as again, this is where the majority of liquidity is, as if retail traders go long on the second point of a trend line, this stop would ideally be below this first point. So I like to see a clean liquidation of this engineered swing low here on the dollar, push down into one of these areas of interest, and ideally a deep discount, so coming towards that 70% mark or even 79% mark. And if we do get a sell-off even further, that's great. And the next area of interest I'll be looking at is this last down candle before the up moves. Ideally took out the structural high, and it was the catalyst towards all of this bullish momentum here. Also noting it was the mitigation of this candle here. So again, the business in this area has already been done. The next two areas of interest I'm looking at from a 4-hour perspective is this candle here and this candle here. So now looking at Euro USD on the daily time frame, I do have specific areas of interest I'm looking at on Euro USD, and again, from a daily point of view, it is important to monitor these specific daily areas of interest / sponsor candles, because they are key regions that will give us impulsive setups. Because we know once a daily area of interest or sponsor candle has been mitigated with, banks are not just going to move the market 30, 40, 50 pips. We're going to see a couple 100 pip swings. And upon refining our area of interest zones on the 4-hour, 1 hour, and upon price reaching those 4-hour, 1 hour refined daily area of interest, we can then further refine as price trades into them. So yeah, just understanding my daily bias on Euro USD. Again, we've just starting over here, we've reacted off this daily area of interest here, this last down candle before the up move that ideally took out the structural high here. Mitigation of this candle as well, but upon that mitigation ultimately saw sort of a bullish structure. But the whole catalyst towards, or the whole purpose of this bullish structure here, was to take out this retail resistance. We do have something present or similar on GBP USD, which I would like to see correspond with this whole example here. But nevertheless, just looking at how well these sponsor candles react to one another, had a mitigation there, had sort of bullish price give us that bullish reaction, ultimately trading away from the sponsor candle here, this last down candle before the up move that did liquidate this trendline liquidity, had that small pullback to where the sponsor candle here, ultimately seeing higher prices to where to liquidate this retail resistance. Upon doing so, we've rebalanced with this inefficient pricing here, and we did have a mitigation of this specific institutional candle here. So to a certain extent, all of the business in here has been done. But in saying that, we do have this daily sponsor candle that I am still monitoring, and price still can reach up there. But more so, I'm looking at these two areas of interest. And again, the first one I'm looking at is this daily area of interest. Why am I looking at this daily area of interest? Because we've took out all of this prior buy side liquidity here. And upon doing so, we've ultimately had that sell-off, and after that sell-off, what have we created? This inefficient pricing here, which I do think we are going to rebalance with. So again, this is my first daily area of interest, and upon price reaching this daily area of interest, I would then look to further refine it on a 1 hour, 4 hour, and yeah, arguably that 1 minute and 5 minute, upon us properly refining it on the time frames. My second daily area of interest will be this sort of price zone here. So again, from this engineered swing high here to this engineered swing low here, drawing my premium and discount. I really want to see price trade into a premium in order for me to look for that swing. And the reason I say that swing is because that's where we can sort of capitalize on them high RR trades. Then 1 to 50s, 1 to 80s, and arguably then 1 to 100s that we like to sort of hold on. And not only that, this is exactly how we get impulsive setups. So those of you who are sort of not impatient but like to see the market move in their favor straight away, which I'm pretty sure everyone likes to see that sort of momentum. As soon as when they're in a trade, the trade moves in their favor buyers straight away. This is exactly how you sort of capitalize on those opportunities. And if we just look at the daily range right now, we are in this contraction range here. And what do I mean by contraction range? Price is just stuck in a box, arguably just moving sideways. Hit a level here, sell off, hit a level here, sell off. So arguably this is the perfect world for a retail perspective, as we have equal highs here and arguably sort of equal lows here. So upon price reaching a certain level, they look to buy. Upon price reaching a certain level here as resistance, they look to sell. So I want to see some clear liquidation, which we have seen now upon reaching this daily sponsor candle here. And why is this a valid daily sponsor candle? Because it's the last down candle before the up move, and again these were 3 aggressive bullish candles, traded back once into it, twice upon trading into it again. We've traded into it arguably 1, 2, 3, 4, 5 days in a row. So I do think this area should hold. We've liquidated these lows here, so a clean raid of those lows and a mitigation of that candle there. So that's always a good thing to see, as liquidity has been gained and mitigation has occurred. So now we could see higher prices to ideally liquidate these relative equal highs and possibly trade into our area of interest. Now let's refine this on a 4-hour time frame. Just delete this for a second. So looking at Euro USD on a 4-hour time frame, we did have these relative equal lows here. So again, we have 0.1, 0.2, and how to sort of look at relative equal lows is you just want to look at 2 engineered swing lows in sync with each other. So again, we do have this engineered swing low here, we do have this engineered swing low here. So again, we could just move that there and consider this as a valid liquidity pool here, as there are stops present below every engineered swing low and every engineered swing high. So again, I did talk about this trendline liquidity as well on the previous market outlook, and I explained that if we were going to sell, if we were going to have that sell off back to our Pacific area of interest, I would like to see a clean liquidation of this trend line here, and I don't mean from a bullish standpoint, I mean from a bearish standpoint. And what I mean by this is, yes, we have taken liquidity from this trend line liquidity, and arguably liquidated 0.1, 0.2, came close to 0.3, but could consider this as a sponsor candle here. This last up candle before the down move that you broke the structural low here, so we could actually see a possible reaction off there, which means the bearish momentum could continue with this sponsor candle here. But nevertheless, we'll focus on that in just a second. But what I was trying to illustrate is I don't want to see price just stop at this sponsor candle here, and I did call this sort of move here. Didn't want to see price just stop there. Yes, we saw a small Wyckoff schematic there, but yeah, it wasn't really valid because from a average retail perspective, what do they like to see? They like to see upon a trend line ideally breaking out, and people going long from the breakout of a trend line. They like to see more conservative traders like to see a retest and then ultimately long. And upon retail seeing this sort of hold as resistance and the support, and the reason I say that is because their methodology is doji here. Again, this is not a retail lesson, this is just how the other side of the traders are looking at the market and how we basically look at the market. Ultimately it shows price is slowing down, but really what we've done is we've liquidated this prior high here. Not really a swing high, but it's a prior engineered high here. Upon that liquidation, we've ultimately sold off further. So again, all stops that were present below this low here or below these relative equal lows have now been liquidated, and we've seen a clean sell-off into that area of interest. And I believe on a 1 hour time frame, we did actually look for longs on this. So if you're still holding this, that's a beautiful trade. Just on the hourly time frame. Again, that was a 6.5 pip stop. And arguably you did have another opportunity present on the upon market open, I believe. So yeah, if you did get into that trade, very well done. But something else I'm looking at on Euro USD is this 4 hour area of interest. So again, this is the last down candle before the up move, and ideally we haven't really had a mitigation of this candle here. So yeah, there's two ways to go about this. Maybe we see that bullish reaction to ideally liquidate these relative equal highs. Yes, we've seen a mitigation of that Pacific sponsor candle there, but upon every mitigation, it's either a Pacific sponsor candle or a engineered swing high, and in this case I do think it's an engineered swing high. And the reason I say that is because if I actually just put on my premium and discount zone here, we can see that this level is just in alignment with equilibrium, meaning it's sort of still at a premium. I'd like to see price trade a lot higher to the 70 mark here, as explained on the dollar, and to this 4-hour area of interest here, as these are quite deep premium pricing. So I'd like to see Euro USD trade into this 4-hour area of interest here, or arguably this 4-hour area of interest. Give me a sell-off confirmation. I am going to be short on both of these 4-hour areas of interest, and yeah, upon price giving me the right signals, I will look for shorts. Arguably, even if I get 1 to 6R, I'm banking 60-70% on my profit, arguably 80% depending on what price action is telling me, and yeah, letting price do his thing. So for example, if we do bank, let's say we get a 1 to 10 over here, so let's say we sort of see that, and we or maybe we get a 1 to 12, we take about 70% of our position here, and then ultimately price basically gives us the opportunity, sorry about that, and then ultimately sells off, and then we see a bullish reaction afterwards back into this 4-hour area of interest. What I've done, I've capitalized on this area of interest here, and now I know price is most likely going to react on this 4-hour area of interest, and then I will look for the same thing here present on a 5-minute time frame, just looking for refinements. Upon refinement, a stop hunt, possibly a breaking market structure. Upon that manipulation occurred, which is a stop hunt, we have a mitigation, and then ultimately look for shorts. And yeah, if we don't get a clear push down into this 4-hour area of interest, and price just flies and ideally liquidates these relative equal highs, I'm going to be expecting price to sell off back to this 4-hour area of interest, and this is where I'll look to take my longs to where this 4-hour area of interest, as this was arguably, just sort of zoom in on this candle here, this was the last up candle before the down the bearish move, and yes, it is a wick, but on a 1-hour time frame, I believe we can see that full-bodied candle closure there that still needs to be mitigated with, and we do have this inefficient pricing that needs to be rebalanced with. So again, this is a very strong area of interest and a possible target for swings on Euro USD upon price reaching this area of interest here. So again, that's my framework on Euro USD going into next week. Just looking at this on the hourly time frame, just to refine it a bit more. So again, same thing present on the sort of hourly time frame, was that entry I talked about, but we also do have this 1-hour area of interest, which I am currently monitoring. Upon us liquidating these relative equal highs here, we may see a bearish reaction of this sponsor candle here. Again, I'm not really looking to get into any trades right now, because time and price don't sort of match up. And what you'll normally find is upon price reaching a Pacific area of interest, but it's not in alignment with the time element, it's going to be quite annoying, because price is going to move sideways. It's not going to give you that volatility that you need, and you're going to be stuck in the trade for, I wouldn't say countless amount of hours, but unnecessary time, when you're going to be basically wasting or monitoring unnecessary time, where you could be doing sort of other things, etc. With our time spans, the 7 a.m. to 9 a.m. for London and 12 p.m. to 2 p.m. For New York GMT time, it basically puts trading into perspective, in the sense that those are your 2 time zones. Those are the 2 times you trade. Everything else, you're refining your skill set, you're journaling, or you're doing other things in the day. You may be going to the gym, or reading a book, or going out with family, or going out with the missus, or just something else during the day that's not related to trading. We don't want to make this job as in, oh, it's 24/7. We're trying to look for opportunities and scale into as many positions as possible, because we both know from a retail standpoint, You know, they like to get into, you know, hundreds of positions if they can. They trade indices, metals, currencies, stocks, bonds, cryptos, all in the same day. And arguably what you've done, if you risk 1% on all of those asset classes together, you're ideally risking 30%, just trading all of them simultaneously. So have your currency pairs, have your areas of interest in mind. Upon price, trading into them, refine it. If it's in alignment with time and price, take the entry. If not, you know, wait till the next day, wait for that session to give you that corrective standpoint that you're looking for, and then trade accordingly. But nevertheless, just getting back onto Euro USD on the hourly time frame, we have seen that push up in price now. I'm just going to delete this for a second here. We have seen that push up in price now. Ideally, want to see a clean liquidation of these relative equal highs and a possible mitigation of the sponsor candle here. And it is valid due to not only it being a sort of big bodied candle before that bearish impulsive move that took out the structural low, but we do also have this inefficient pricing present over here. So something I'm definitely monitoring. And upon price trading into this in the London session, I will look for further refinement. And the reason I wouldn't set a limit on it as such is because just look at these relative equal highs here. Those are just too clean. And we do have that 0.1 of the trendline liquidity. But in saying that, just looking to refine this area of interest here to the 1 hour sponsor candle. This last up candle before that bearish impulsive move that ideally took out the structural low here. We'd have a mitigation there, sell off. Could this be the next mitigation towards that next sell-off, towards this 1 hour area of interest to liquidate sort of these relative equal lows here and ultimately look for higher prices? So just putting that there. This could be our next area of interest to look to go long from. Just going to draw this one. Could be expecting something like that. That's Euro USD. Now scaling into GU. GU, looking at this on the daily time frame. Let me just start on the weekly time frame. Actually, it just gives me a bit more of a refined viewpoint. And the reason I said let me start on the weekly time frame is because just look at this price action here, just moving sideways. Again, we're in this contraction range here. Just not a market that, you know, you want to be trading thus far. We want to be involved with this sort of explosive moves here. Minimal pullback, and explosive momentum up. And even when we have these pullbacks, we know they're a mitigation of previous sponsor candles here. Again, here it's just sort of choppiness. So upon you being confused on one time frame, you always use the next time frame up to give you an overall bias and exactly where is price heading next. So again, looking at the weekly time frame on GBP USD, again even on the weekly time frame, we see a doji and doji candle here. So it just shows the market is indecisive right now. And upon especially on the weekly time frame, we see this sort of contraction range here, and the daily time frame, we normally see an expansion move, a heavy expansion move afterwards. But nevertheless, looking at the engineered swing high here and the engineered swing low here, mapping out my premium and discount zone from a short-term perspective on the weekly time frame. What I'm looking for is price to trade back into a premium pricing and ultimately give me a sell-off where back to a discount, and this discount and premium pricing or area or price range rather, is based on this engineered swing low here to this engineered swing high here. So again, I'm expecting a further sell-off on GBP USD to ideally this weekly area of interest / sponsor candle here, or this really should be areas of interest as we look to refine. On a smaller time frame, but yeah, this would be my first area of interest on a weekly time frame to ideally look for them impulsive longs. So again, if you're a swing trader or position trader, we could be looking for a huge amount of pips within this area of interest there. In saying that, upon price reaching that premium pricing there, I'm ultimately looking for a major sell-off on the pound to liquidate these engineered swing lows here. Again, we have another engineered swing low here. We do have another engineered swing low here, but it's in alignment with this weekly area of interest. So I'll be seeing how price reacts upon here. If we just sell off completely, my next area of interest is here. This last down candle before the up move. But ideally, we didn't really take out this structural high. To a certain extent we did by the wick. and liquidated those highs there. But it was really this candle, this down candle before the up move, that really gave us that break in market structure and allowed us to see higher prices. So yeah, those are my two areas of interest on a weekly time frame that I'm going to be monitoring. Now scaling into a daily time frame. Again, we can see a sort of wedge pattern forming now from a retail perspective. There is a lot of liquidity in GU from a retail perspective right now. We do have relative equal lows here, arguably relative equal highs here, trendline liquidity present here, trendline liquidity present here. So it's sort of a 50-50 market in the sense that we can sell off, come to this daily sponsor candle, this last down candle before the up move, and I do favor this sort of daily sponsor candle. And the reason is because we had a clean raid of these relative equal lows here, a mitigation of this sponsor candle here, ultimately saw higher prices and created sort of this inefficient pricing, which did rebalance to a certain extent. But we do have a small amount to still rebalance with. So I'm just looking at this from the daily perspective and looking at the inefficient pricing there. So we do have this inefficient pricing to still rebalance with. That's why I'm favoring sell sizes. This daily sponsor candle does look good upon mitigating with this arguably this manipulation in here, but it was the manipulation that occurred prior to all of this bullish momentum was due to this candle here. So I would like to see clean mitigation of that candle there. Upon mitigating with that, I will ultimately like to see higher prices to where to clear out this trendline liquidity, these relative equal highs, and ultimately to rebalance with this inefficient pricing here. And this sponsor candle here, as we can see, this large wick here did take out stops, I believe. Just scaling back onto a weekly time frame. Don't know why that's frozen, but so it didn't take out stops, rather it mitigated with this candle here. And what was the reason of this mitigation here? Just focusing in on this price action here. We did have this relative, engineered swing high here. And what do we know about engineered swing highs? It contains a liquidity slash buy stops slash retail orders, and we had a clear liquidation of that high there. So again, similar scenario as we're seeing present on GU. It was this candle that was a catalyst towards this sort of manipulation. Yes, it formed on this bearish candle, but it was ultimately this candle that contained the majority of volume slash contracts in order to manipulate that high there. And we saw clear mitigation with that wick there. So now scaling back onto the daily time frame, again we're in sort of 50-50 zone, like I mentioned previously. Ultimately we could run up, take out this trendline liquidity, these relative equal highs, and mitigate with that specific sponsor candle there, or we can sell off and mitigate with this sponsor candle here. I do favor this one more due to it having a lot more confluence, and ultimately it would make sense for us to trade back into a discount price range before we look to see any premium pricing afterwards. And I do expect this whole bullish momentum to continue as we've had a mitigation of SC after SC after SC after SC. So I do expect this SC to be mitigated with, and ultimately to then create a new higher high. So we could be expecting a new higher high on GBP USD. Now refining this onto the 4-hour time frame. So again, just look without any annotations or anything, you can see our price is just moving sort of sideways. So again, to hold long positions in here, it's going to be a bit hard, and the reason I say that is because upon price reaching a Pacific, for example, this Pacific sponsor candle, we ultimately sell off. So are we going to see another sell off of this Pacific sponsor candle, or are we going to raid these relative equal highs here? So it's better for the market to give us a clear direction. But in saying that, just looking at the 4-hour time frame, we do have this retail resistance as present on Euro USD, and we saw what happened to this retail resistance. We saw a massive wick take out that retail resistance, or the sort of buy side liquidity that was present above all of these wicks here, and then ultimately sell off. Looking at this on the 4-hour time frame as well, again, just explaining this quickly, upon every contraction range or small contraction range on the 4 hour time frame, there is a build up of liquidity, and when we see this in alignment with a trendline liquidity, we can expect impulsive moves there. So again, that's one for the books, in the sense that take note, upon price reaching a certain area of interest and building up these contraction ranges in alignment with trendline liquidities and engineered swing lows, we normally see a very aggressive sell-off, and these are the moves we want to be in line with. And on a smaller time frame, you could have refined that, ultimately look to go short. But nevertheless, explaining exactly what I'm looking at for the week ahead on GBP USD, I do expect this trendline liquidity, retail liquidity to be swept out cleanly, for this inefficient pricing to be rebalanced with, and yeah, ultimately come into this 4 hour area of interest and sell off. And just looking at previous areas of interest, our sponsor candles, we did have this last down candle before the up move that took out the structural high, and it was in alignment with market structure. We had a mitigation of that, ultimately saw higher prices, had that mitigation to a certain extent off this 4 hour area of interest, but more so it was this last down candle before the up move that ideally was a catalyst towards all of this bullish momentum here. Had a mitigation, had a that bullish reaction after this small bullish reaction here, mitigation of this sponsor candle here, took out these relative equal lows here, and we saw that impulsive move afterwards. After that, we've just sold off, sorry. This was the sort of framework for my bullish bias. I did see price coming back into a sort of premium pricing, and upon me seeing a bit more momentum formed on the hourly chart, which I'll just show you now. I did see higher highs being formed, higher lows, higher highs, and I believe this is more present on the 5 minute chart. Just ignore these boxes here, but just looking at this on, I'll give you a 30 minute chart. We see that higher high, we see that pullback, higher low, higher high. So again, we created that new higher low, which was intact with current market structure. And now scaling into the 15 minute / 5 minute time frame. Upon taking out a new high, what do we know about engineered swing highs? It contains liquidity, it contains buy stops, retail orders, etc. We want to take a certain amount of partial here, or if not, put your stops to break even. So again, from entry to here, we're about 30 pips in profit. So if you don't actually take any partials, you would have got stopped at break even. And this is exactly why I don't really like to trade on a Monday, as we saw the 1 p.m. news be the complete opposite of exactly what we're looking for. Nevertheless, we have had a mitigation of this hourly sponsor candle here. So again, following this whack off schematic here, we have the PSY, SCAR, ST, STB spring test, last point of supply, and upon forming that last point of supply, it now looks like GBP USD wants to fly off this mitigation of this sponsor candle here. So I'm still favouring longs. I'll probably look for a re-entry upon London, but in saying that, just looking at the 4 hour time frame again, we do have this last down candle before the up move that ideally took out this engineered swing high here. So again, this is a key liquidation area / mitigation area, not necessarily liquidation, sorry, a mitigation area. This institutional candle here, just drag this annotation here. I want to be looking for I want to ideally see a clean liquidation of this candle here. If we do trade impulsively through it, what I'll be awaiting for is price to pull back to this candle, and then ultimately reach our 1 hour area of interest, and then look to sell off lower, arguably. But again, it's all about when price reaches these hourly areas of interest, look to refine, and arguably, do we take position off? Do we ideally hedge our position? As hedging our position, it will be a lot safer option, especially considering this retail resistance above that GU could ideally fly through. So we could actually be looking for something like this all the way to our 4 hour area of interest here, a 306 pip move, giving us a 1 to 32 RR. But yeah, we are not currently in this trade, but I'm just saying if we do get a pullback within that Pacific range, something like that we could be looking for. clean sweep of this retail resistance and mitigating with this 4-hour sponsor candle, this last down up candle before that very bearish impulsive move. So that's something I'm looking at on GBP USD. I am bullish overall, but I'm looking to hedge my position as price reaches into those specific areas of interest. Now looking at NZD USD from the daily time frame. So again, NZD USD, I believe I called this on the sort of quantum pairs. Wanted to see a pullback back into this daily area of interest. Looks like we have seen a bullish reaction now. And where am I favoring this sort of bullish reaction to end? Ideally at this daily sponsor candle, or rather area of interest. But this is a daily sponsor candle, and the reason I say that is because it's the last up candle before that bearish impulsive move that ideally broke this structural low here. Yes, we also have this last up candle before that bearish move that ideally was the one that took out this structural low. So we could actually see we have seen to a certain extent a mitigation of that candle and a sell-off. But I like to see this sort of sell-off come a bit more deeper in price, and what I mean by that is upon this sort of premium pricing here. Again, I've got a limit present on NZD USD upon it rebalancing with this inefficient pricing and coming to the sort of mean threshold of that daily sponsor candle there. So I'll be looking at the charts and refining upon this limit being activated. But yeah, I want to see price trade into a premium, this daily area of interest / sponsor candle, rebalance with this inefficient pricing, and then ultimately sell off. Also looking at the sort of wicks in this candle here. Again, we wicked into this area here, over here, even over here. Look at this sort of bearish candle here, just highlighting the body of that candle. Sort of wicked into it here, had a failure to actually close below that daily area of interest. But this was the only candle so far that we've traded into properly, had a full candle closure. Can't really say that right now, as the daily candle closure hasn't really formed yet, but from what we can see, we've traded cleanly into this daily area of interest. Now we could actually be looking for higher prices to ideally take out these engineered highs here, these relative equal highs here, and yeah, see more bullish momentum on NZD USD. Now looking at the 4-hour time frame. Again, similar to GBP USD, Euro USD, etc. We do have this contraction range here, and the reason I'm considering this as contraction range, yes, we had this bullish momentum here, but notice straight afterwards we had this sell-off, a build-up of liquidity. Arguably we've swept that now, swept that twice, but still we're just in this range here. We haven't really seen price action to a certain extent like this. We have just impulsiveness here, small pullback, and then impulsive here, impulsiveness again even from the bear side. We sort of reached that last up candle before the down move upon this price action being formed, and ideally swept this prior engineered swing high here. Upon this price action being formed and the business being done in this area here, we've ultimately sold off. Small contraction, sell off here. Now it looks like this is not really a small contraction. Arguably this is a large contraction, but what we have in here is a contraction upon a contraction. So upon these areas of interest / orders being built, not areas of interest, sorry, orders being built, especially on the larger time frames, we normally see some explosive momentum moves. So what am I favoring on the 4-hour time frame? I'm favoring mitigation of the sponsor candle here, this last up candle before the down move. Why am I favoring this candle here? Again, we've already got a mitigation to a certain extent of this candle here. Had that small sell-off, formed that contraction range, price wasn't really doing nothing. I believe this was FOMC upon FOMC, liquidating all of these relative equal highs here, trendline liquidity and engineered highs here. Upon liquidating that sort of area of interest, we come back down, retail thinking this is a support, or do we have this liquidation here? Saw that rapid move back up, but not really looking at that going into sort of Friday and going into London close, etc. And then upon market open, we've seen a sell-off where gap down into or below this engineered swing low here. And upon price closing below, or opening, sorry, below this engineered swing low here, we've seen higher prices. So to a certain extent now I am bullish short term back to this 4-hour area of interest, and I want to see a clean sweep of not only these relative equal highs here, but it's in alignment with so you're just going to put that at the bottom, this high as well. So I like to see a clean sweep of this liquidity here, mitigation of this candle here, upon that candle being mitigated, ultimately a sell-off to where to liquidate these lows here and ultimately come to this 4-hour sponsor candle here. Not really an area of interest, but this is a clean sponsor candle, as this was the last, these two last down candles were the last down candles before this, firstly the structural break here and this whole bullish momentum here. We had a sort of mitigation of this candle here. Notice what happened after this mitigation. We ultimately see aggressive higher prices that liquidated these engineered swing highs here, arguably relative equal highs. Had another mitigation to a certain extent. Yes, we are in a contraction range and it was choppy, but nevertheless this was the main candle that catalyzed all of this bullish momentum. And notice just what happened after we had a mitigation of the sponsor candle. This ideally would be my second area of interest slash second sponsor candle in line. We did see quite a aggressive bullish reaction that we could have ideally looked for swings on this. We did catch a couple nice NZD USD trades last month, but nevertheless that's something I'm focusing on. A sell off back into this 4-hour sponsor candle, ideally into a deep discount, and then ultimately fly from there back into this 4-hour area of interest, which is in alignment with this daily area of interest here. So something I'm monitoring. And also you can probably already see we do have this inefficient pricing here that needs to be rebalanced with, and a beautiful confluence towards holding our longs. And what we normally see upon price rebalancing with this inefficient pricing, we normally see an impulsive reaction like this, but on the bull side. So this could be looked at as this whole range here, just a build up of orders. I want to see arguably we could sell off back into this 4-hour sponsor candle and then see higher prices. Just depends on what price brings, but upon Monday we haven't really done much, haven't really missed out on anything. I will be up tomorrow in the London session updating the group exactly what I'm thinking on NZD USD next, but upon it reaching this specific area of interest, look to refine and could possibly look at this area of interest as well. But I'm not really too confident on this area of interest. The reason is because we do have relative equal lows here, and that's basically an illustration of liquidity as stops remain below these relative equal lows. So again, retail like to have a stop of 30 to 40 pips, and we can see that's 36.4 pips. This lines in cleanly with our 4-hour sponsor candle there. So those are a couple areas of interest I'm monitoring. And yeah, just looking at this on the hourly time frame to just further refine. Again, refining that level just a bit more. Could be looking at this sort of level here. Not really too confident on that, but if this price does trade back into this during London or New York, possibly looking for longs on that, as we do have a lot of liquidity present below these lows here. So we could actually just see a sharp sell-off and possibly bank a 1 to 10 or maybe even 1 to 6 or something. Mitigation of that candle there, or our next area of interest will be this candle here. And then ultimately sell off a lot deeper back into what I've explained on the 4-hour time frame. So there's a bit of refinement there, and again refining this area here on the hourly time frame. Why have I used this sponsor candle here? Arguably this was the last engineered swing high here. We had a clean liquidation of that high there. Upon liquidating that high there, we've ultimately sold off, and this was arguably the last up candle before that major sell-off that has inefficient pricing below it. So just look at refined targets slash entries for shorts. We could be looking at this 1 hour area of interest, and that is NZD USD. Now scaling into AUD USD. Again, looking at this from a daily time frame, or even again, this hasn't really done, to a certain extent we've done a lot more sort of than GU and EU in the most recent price action, but again just still ranging. Daily not really telling me much, to be fair, but just looking at this from a weekly time frame. So again, looking at this from a weekly time frame, it does give me a lot more insight on exactly where we're going next on AUD USD. So again, we've reacted off this sponsor candle here, this last up candle before the very bearish impulsive move, and these were levels that were called on the previous market outlook, and I believe it was literally in sync with each other. So first week I said I want to see a liquidation of this high, and then this high, and every week since then we've got a liquidation of all of these highs here, and we've mitigated with that sponsor candle to the T. Ultimately sold off to where? To this sort of weekly area of interest, this last down candle before the bullish move. To a certain extent, took out this structural high here on this bullish candle. But yeah, upon mitigating with that candle, price traded bullishly, took out this structural high here. Ultimately had this last down candle before the up move. That looks like we've had a solid mitigation of, and we possibly could be looking for one more push up on the weekly time frame to ideally form a possible distribution schematic, and then look for a sell-off to where? To this weekly sponsor candle, this last down candle before the up move, and to rebalance with this inefficient pricing here, and also to come into that sort of discount range. So again, from this I'm looking at from this engineered swing high here to this engineered swing low here, is a discount price range I'm looking at. Also we could look at it from sort of this high here, and ideally wanting to see price trade back into a discount. Upon price trading back into a discount, is also a mitigation of this last down candle before the up move, and yeah, I would obviously look to refine further, etc. But looking at this in the grand scheme of things, this is the real premium and discount I'm looking at. So again, I would like to see price trade a bit more aggressively into one of these areas of interest in order for me to take a major swing on AUD USD. And the reason I say that is because these are deep discount areas of interest. So again, this weekly area of interest is in alignment. This weekly area of interest is in alignment or just above the 50% / equilibrium of this whole discount price range here. So yeah, it's not really a strong area of interest to be looking for swings, especially if we're looking to form a new higher high. In addition to that, we do have this engineered swing low here and engineered swing low here, which could be looked at as a possible liquidation zone. What I'd be favoring is for these weekly areas of interest. I'm just going to put that in the center. Sorry, inside. Or these sponsor candles rather, this last down candle before the up move, this last down candle before the up move, to be mitigated with, and then ultimately looking for swing longs on AUD USD in the grand scheme of things. So a couple areas of interest on the weekly time frame I'm monitoring, but I do want to see, or do you want to favor one more push up? Let's see how this sinks in with the daily time frame. Looking at the daily time frame on AUD USD. So again, we do have that daily area of interest. It's not in alignment with the weekly area of interest. As the weekly area of interest, I'm expecting ideally a new higher high to be formed. But in saying that, this is why it's important to sort of refine our stuff on the lower time frames, and not to just guess, okay, we might be forming distribution or accumulation or reaccumulation schematic. Understanding exactly what price has done previously from a liquidity standpoint, and yeah, understanding where banks are net long, net short, understanding where liquidity has been taken. So just looking at this current price action on the daily time frame, we do have this last up candle before that bearish impulsive move that took out the structural low here, have that small push up, create that new lower low, arguably that new lower high. Now, are we going to possibly create a new lower low? I don't think so. I do think this daily area of interest is going to hold. The reason I say that is because this is the last down candle before the up move. Sort of had a mitigation to a certain extent over here, had that bullish reaction, but ultimately it looks like just this whole wick region here is going to be a massive retail support zone. So just going to highlight this in blue instead of red, as the red one was highlighted for a retail resistance zone. So that's retail support zone. I would like to see a clean liquidation of this sort of zone here. A push through to this daily area of interest / sponsor candle. Upon price reaching this daily area of interest, I will be looking for longs to ideally liquidate these relative equal highs here. To a certain extent, we've already liquidated it and sold off. So again, even this market here on the daily time frame is 50-50 due to it contracting and not really showing us much. I like to see this sort of price action or this sort of price action, and then I'll look to capitalize accordingly, as it's just much more favorable than sort of guessing which side the market is going to move, as we've already liquidated over here. So my favored bias will be a clean mitigation of this daily area of interest / sponsor candle, because the business over here has already been done. Upon a mitigation there, I want to see a push up into this daily sponsor candle arguably, or area of interest, because we will look to refine it back into a premium pricing, and then ultimately sell off to take out these engineered swing lows here, and then ideally look to rebalance with this inefficient pricing present over here. Ultimately we have got a lot lower to go, could even sell off all the way to this sponsor candle here, but again we'll worry about that as price goes on. But if you do manage to get into a position, or if price does trade into this area of interest and sell off this week, which is unlikely to happen, possibly looking in the next couple of weeks this area of interest to come to fruition, but if it does happen, look at the weekly time frame in order for targets. So yeah, I'll be looking for a swing position upon price reaching into this daily area of interest. Now scaling into the 4-hour time frame. So again, on the 4-hour time frame, there's a couple areas of interest I'm favoring, especially for possible longs. So firstly, it was this last down candle before the up move, which I did highlight in the quantum pair. So if you did take advantage of that, well done. But I don't think this bullish momentum is going to hold. And the reason I say that is because we do have relative equal lows just below that. So I do think this is going to be a small push up to possibly sell off during Asia maybe. So if you did take this trade or refined it, please ensure your stops are at break even. But my next area of interest after possibly a sell-off is going to be this 4-hour area of interest. And the reason this is a 4-hour area of interest of mine is because we had a clean liquidation of these relative equal lows here. Had this last down candle before the up move that ideally took out the structural high here. Ultimately mitigated that sponsor candle there, had a small pullback, and then had that impulsive bullish reaction afterwards. So to a certain extent, yes, this was the last down candle before the up move that took out a structural high here and formed this whole inefficient pricing here. But it was more so this candle here, and arguably this candle here, that was the catalyst towards all of this bullish pricing here. So I'd like to see a clean mitigation of this 4-hour area of interest, and then look to go along equally. I'm looking at this candle here. The reason I haven't highlighted it as a specific area of interest of mine is because we do have relative equal lows here. So I don't think banks are going to mitigate with a specific sponsor candle and then look to see higher prices, even though there is liquidity present below even though there's liquidity present below that specific sponsor candle. So below that, we do have this valid sponsor candle here, this last down candle before the up move. That ideally was a catalyst towards this huge bullish momentum here, swept trend line liquidity, various amounts of equal highs from this inefficient pricing, which rebalanced. And yeah, it does hold a lot of weight to it, and I believe it's got a lot of volume to it, contracts, etc. So this is the other 4-hour area of interest I'm looking at. And again, on the 4-hour time frame, I believe it was on the hourly. On the daily time frame. So again, we do have that daily sponsor candle. This is just a more refined viewpoint. this 4-hour area of interest, this last down candle before the up move that took out the structural high, and ultimately after this last down candle before the up move, we had a mitigation of that candle, saw a higher high, higher low, ultimately saw that new higher high. So yeah, this was the catalyst towards all of that bullish momentum. So I'm favoring this area of interest to be mitigated and see higher prices off there. This would be my most favored area of interest, and I will look to take a risk entry or possibly a limit of this 4-hour area of interest. And the reason I say that is because upon price trading into this area of interest, we're trading into a deep discount. So yeah, we could expect a huge amount of higher prices to where possibly this 4-hour area of interest that I have highlighted here, liquidity has been taken from these relative equal highs. To a certain extent, yes, liquidity has been taken, but the liquidity taken may have been the catalyst towards this sell-off to do what? Mitigate with this specific area of interest. And this is what I mean. Now we're in a specific area of interest. If you were to hold this, we know we've got valid areas of interest below. Take partials, take majority of, not majority, but maybe 40%, 50% of your position off, and what you'll actually find is them small profits count. And what I mean by that is what I was going to elaborate on is, if you ever look at your sort of losing streaks, especially if you're using disciplined risk management, you'll find out that the small losses overall add up, and sometimes it can be very painful at the end of the week, at the end of the month, depending on how many positions you're in, how many pairs you're trading. It's exactly the same with the small profits. We ideally look to get along from one of these areas of interest. Bank maybe, 1 to 7, 1 to 10, and call it a day. Upon price trading the next day or the next session, it always gives us another opportunity to get in sync with the trend. You just have to backtest the methodologies and understand exactly what's going to happen next, or what's happened before in prior price action, that could ideally replicate future price action. But nevertheless, yeah, that's how I'll basically look at areas of interest. Always taking partials at engineered highs, relative equal highs. Large majority of partials were taken off. As let's say you was long, and I'm going to use this as an example, but let's say you was long upon the stop hunt of this prior engineered swing low here, and you saw these relative equal highs, and you're like, oh no, this is going to sort of swing for the moon and come to this 4-hour area of interest. What did price do? Liquidate these highs. It was more so an order activation more than a stop hunt, and upon doing so, it ultimately sold off, and you probably would have been stopped at break even here. So it's in this game, it's not about being greedy. It's about bagging your profit, and ideally putting bread on the table. That's what it's about. And yeah, if you are a swing trader or a person who likes to hold positions for a long amount of time, such long majority of time, you can still do that. That's perfectly fine. But along the way, please ensure you do take partial profits. So yeah, that's my bias on AUD/USD on the 4-hour time frame. Just getting down the time frame now onto the hourly time frame. Looking at AUD/USD on the hourly time frame. Again, we have these refined areas of interest here. Arguably, we have this refined area of interest over here, which was in alignment with the 4-hour area of interest. But yeah, just focusing on these hourly areas of interest. My premium and discount zone is ideally drawn from this engineered swing high here to this engineered swing low here. So I'm favoring price to trade into one of these areas of interest here. This last down candle before the up move, or this last down candle before the up move. Not necessarily this one, as to a certain extent we've had a mitigation, but you can consider these two. But I feel the business in here has already been done, as we've had a clean liquidation of this low here. They ideally formed these relative equal lows. So again, liquidity is present below this low here, and upon doing so, we've had a mitigation of that candle. To a certain extent, had a mitigation of the high of that candle there. To a certain extent, and then ultimately saw higher prices. But these would be my next areas of interest here. Upon price completely trading through these and taking out these relative equal lows, I'm going to be looking at this area of interest as my next slash sponsor candle as my next area of interest. And the reason I say that is because we did previously take out this prior engineered swing low here, clean body candle closure, ultimately had that bullish pricing, had a mitigation of this sponsor candle here, but still left this inefficient pricing slash imbalanced pricing intact, and ultimately an unmitigated sponsor candle. So that will ideally be the best possible area of interest for myself. But in saying that, these two areas of interest are in alignment with the current trend. I don't know what happened there. But yeah, those are the areas of interest I am favoring on AUD/USD. Now looking at euro pound, sorry. Looking at this on the weekly time frame. So again, this is the daily. So again, looking at this on the weekly time frame and just getting an overall structure or an overall picture on exactly what Euro GBP is doing on the weekly time frame. We did have these clean relative equal highs. So again, it's not just something that happens on the hourly time frame or 4-hour time frame or even 15-minute or 5-minute. These equal highs are literally present on a weekly, daily, monthly, 3-month, all the bigger time frames, and arguably the 6-month time frame if you're able to get access to that. But they are visible in most time frames. You just have to understand where liquidity remains. These equal highs were too clean. So if you knew this sort of bias when trading in this sort of zone here, what we've done, we've still got these engineered lows here, and next we're looking to take out these engineered swing highs here, and you could be looking for a phenomenal risk to reward on that. Upon price taking out these highs here, you close for profit. You don't ideally want to be hedging in this situation here, because just relate to anxiety being built up, etc. You want to close profit and ideally be done with that trade, and then ultimately as price sells off, don't really look to chase this sell off here. Wait for a pullback, a mitigation, possibly something done within this wick here, and then ultimately wait for a sell off. That's just talking about the bigger time frame aspect of things. But looking at more current price action, we did have this engineered swing high here that has been cleanly raided with this bullish candle here, very bullish impulsive candle. Upon doing so, we've ultimately had that sell-off to do what? Create more liquidity. The second touch on the trend line had that small push up to ideally mitigate with that previous manipulation that occurred, and they sort of work hand in hand, as we understand that there was something that needed to be done that created this manipulation here. So what do we have? A mitigation, but upon mitigating, we did have further manipulation, sell-off, and ultimately looks like we have had that mitigation now. Sell off, close below this sort of candle here, candle's low, ultimately come back up, mitigated with that last up candle before the down move. So I feel the business in this area has already been done. This is my next weekly area of interest. So I'll be monitoring as price gets into this area of interest here. We've seen a clean liquidation of this trendline liquidity here, 0.1, 0.2, arguably traded straight through 0.3, and yeah, as I like to see, the 0.1 being liquidated. So sort of all retail are out of the market now. I do think the next weekly area of interest, looking at this from a bigger time frame perspective, is going to be this last down candle before the up move, and ideally took out the structural high here. So we haven't actually seen a solid mitigation of that candle there. I'm just going to refine this sort of inefficient pricing zone here. So again, this is our inefficient pricing present over here, this small area here. To a certain extent, we've rebalanced with price, hence why we're sort of just moving sideways right now. We could actually see a small push up and then ultimately sell off back into our weekly area of interest. Now scaling into the daily time frame. Again, on the daily time frame, we're not really doing much. Look at price action on the daily time frame. This is a daily candle. Look at that. Doji, 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 literally ranging probably 30 to 40 pips. Doji, doji, manipulation. Doji, doji. Now it looks like we're picking up some momentum now. If we can close like this, arguably as a Marubozu candle, that'll be perfect, as it will basically signify higher prices, possibly to this wick here. And the reason I'm saying that wick is because that wick was ultimately the catalyst towards the lower prices and was the start of that previous manipulation. So arguably there is some liquidity present within this area here. Sorry, not liquidity. There's some mitigation that needs to be done within this area here. Looking at liquidity, we do have this sort of relative equal highs here. So again, we could see a clean raid of those highs there, possibly come back to this daily sponsor candle here, this last down candle before the up move. But I would like to see a clean structural break, which we to a certain extent we have with this high here. But upon doing so, possibly something like this, and then ultimately sell off to where? To this daily area of interest of mine, really a sponsor candle, this last down candle before the up move that ideally took out this structural high here, and all of this previous liquidity that remained, as we saw in the weekly time frame, those highs that remain there. So upon mitigating with that candle there, I do think we are going to see an impulsive bullish move towards the upside where to take out these relative equal highs here, arguably this sort of trendline liquidity here, and mitigate with this sort of daily area of interest here. Arguably this last down candle before the up move. Sorry, what am I doing? It should really be this candle here, but I believe I refined it but just put it in the wrong area. So yeah, it was really this candle here. So this last up candle before that very bearish impulsive move that ideally took out these relative equal lows, to a certain extent had a not really a mitigation, but we've took out this prior engineered swing high here, rebalance with price, and then ultimately sold off. But I do feel there is a valid mitigation to be done on a 4-hour/daily basis. Even on the daily basis, we understand that wicks contain manipulation, and yeah, there has to be a valid amount of mitigation done within that specific area, trading back into that premium as well. Ultimately from there we can understand how price reacts and possibly look for sell-offs from there. But the main trade I'm looking for is a sell-off back into this daily area of interest, refine, and then ultimately look to go long. Now looking at this on the 4-hour time frame. Again, what I expected sort of come to fruition upon market. Actually, no, Friday. We sort of had that raid of the low, but I just feel these lows here are just too clean. A lot of liquidity has been built up here, and again, this just looks like a clean double bottom. Just zooming out quick, we see that first low there, push up, second low there, maybe a small push up to take out this high here. And then ultimately sell off and create this sort of accumulation schematic I'm waiting on, as we saw a beautiful accumulation schematic come to fruition on the 1-hour time frame, which I'll go through, and we did actually take a beautiful long. I believe it reached about 1 to 60 RR, but nevertheless I'm looking for something like this to come to fruition. In saying that, we have formed this last down candle before the up move that ideally took out the structural high. So again, this is going to be an area of interest of mine, seeing how price reacts in this specific level tomorrow. If we blow straight through it, I know exactly what we're doing, taking out these lows to ideally accumulate price higher. Just looking at the economical news for tomorrow as well. So again, we do have GBP news, which could have an effect on Euro GBP as well. So yeah, upon price giving this accumulation schematic and taking out these lows here, I will ultimately be waiting for a clean mitigation of this 4-hour area of interest. This last up candle before the down move, and again we do have sort of contraction, expansion, contraction, expansion, contraction, expansion. Ideally that new contraction range is this going to be the new expansion. Ideally wait for retracement and then the new reversal to occur. But yeah, upon reaching this 4-hour area of interest, I'll ultimately wait for a sell-off to where? To that daily area of interest I was talking about on the daily time frame. So I want to see a clean push down into that sponsor candle there. Now looking at USD CAD, again this pair quite choppy to say the least, but nevertheless it's like any other pair in the sense that whenever we do have a contraction range, we ultimately have an expansion move to follow. So just looking at this previously, we did have this contraction range, build up of orders, build up of liquidity. Upon that build up of orders, ultimately sold off. But just looking at these sort of candles in between these sell-offs, or as this sell-off occurred, we did have this last up candle before the down move. Why haven't I used this candle? Arguably, we did have this last up candle before that sort of bearish move there, had a mitigation. Up candle before that bearish move there that took out the structural low here, had a mitigation. Last up candle before the down move that took out the structural low here, haven't had no mitigation of that candle there. So there's been no prior price action to the right of the chart in order for us to look for a sell-off. Now looking at this bit more further down, we did have this last up candle before that down move, but the real mitigation come from this wick here, as we took out this prior engineered high here and had a mitigation of that candle there. As from the wick, we've basically mitigated the low and arguably the open of that candle. So again, this is my next area of interest, the wick of that candle there. And the third area of interest is this last up candle before the down move that took out the structural low and formed all of this inefficient pricing, which we have rebalanced with this wick, which arguably looked like a break of market structure, but nevertheless this was really a raid. So again, if you're ever confused on breaks in market structure and raids, look at the bigger time frame and understand, did we actually have a full candle closure above above that Pacific zone? If we did, it illustrates a break in market structure. If we don't have a full candle closure and it's more so the wick, it shows a raid in price. Upon raiding with price, what do? We mitigate it with the wick, not the candle body, but the wick. Had that sell-off break structure again, and ultimately after the structural low has been broken, we've had that pullback back to mitigate with that sponsor candle and then aggressive sell-off. Now it looks like to a certain extent we have broken market structure now. Not the cleanest, as we've had a wick here, and ultimately price is just contracting right now. About to say contraction, but it's contracting right now, just moving sideways. I'm not really looking to go long on this. If the opportunity does present itself, just looking at this on the hourly time frame, I'll possibly look to go longs. But again, it looks like a build-up of liquidity is present over here. Could refine this as an hourly area, hourly area of interest. Possibly even this candle here. So possibly look at these two areas for longs. But if we do, I'd ideally favor a pullback, a deep pullback into one of these areas of interest here, and then one of these, and then look to go long at and taking partials at these areas of interest and possibly hedging my position. So this is ideally where we want to hedge our position, when we've got continuous amount of valid areas of interest present within one another. So literally they're back to back to back. Upon price reaching here, what we've done is let's say we're long here, we've got a whole 1% risk here. What it allow us to do is risk another 1%, but really have an initial 0.5% risk present, as if we do get stopped out on this trade here upon refining it, we've only missed out on 0.5% of our position, because the other 0.5% is going to come from this bullish momentum that's still running here. And ultimately, after reacting off one of these areas of interest, we are going to see that sell-off. Upon it giving us that sort of second or third break in market structure, we can look to put stops at break even, and then basically trail this a lot lower. As just looking at current trend right now, we are constantly making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, contracting, lower lows. So again, these are my valid areas of interest. If we do get a push down or react off these areas of interest first, and then get a push down and mitigate with this possible sponsor candle here, we could actually be looking for higher prices to this area of interest here. Again, this is a clean area of interest that hasn't been mitigated before. If I just scale onto the 4-hour time frame, this is arguably the last up candle before that very bearish impulsive move, and we do have prior engineered swing highs here, and relative equal highs here. So again, this is a good area of interest that we could possibly look for longs off if we do get the sell-off first, and then mitigate with that area of interest, then go for longs. If we do have longs first, again, price selling off during Asia or possibly early tomorrow London, then I'll be looking for a deeper sell-off on these hourly areas of interest. This is what I mean when I say price is 50-50. Again, I've been sort of doing this for a long time now, and I understand these market conditions, which one's more favorable and which one's not favorable, and I can tell you these market conditions here are not the most favorable conditions to be in, but nevertheless, you can still frame a solid picture in where price is going to go next, but you just have to be a bit more quicker and on the ball with things, as price reacts to your specific areas of interest. No need to rush in these trades. Let price trade into our specific zones, and we will react accordingly. Not really looking at AUD JPY, but if you did take that trade, I did call last week, a 40 pip sweep, and let's just see how many pips this did sweep. So literally 40 pips to the T, and then ultimately sell off. I do think we're going to clear this whole trendline liquidity. Now we've cleared 0.1 here, possibly mitigation, clear of these relative equal highs. Looking at this on the hourly time frame, do have a lot of liquidity present over here. Have this inefficient pricing here. Sponsor candle present over here. This last up candle before that very bearish impulsive move. And it's impulsive because just look at these candles here. The Marubozu candle, arguably an engulfing candle that engulfed all of this prior price action here. Sold off sort of in a contraction range upon market open. Seen that massive gap lower, arguably now rebalanced with that gap there, so possibly could be looking for move into this candle here, small sell off, back into the sponsor candle, and then sell off again. So one way to get into the trend, but yeah, something I'm just monitoring, just looking at. Not really looking to take an entry on it just yet. I wanted to give me more price action, as you know, we are trading off in a reversal. Arguably, I did call the top of this trend, as we've been bullish for a very long time. So upon us sort of catching a short in this, you know, it'll give us a substantial amount of pips, which have to wait for the right opportunity to react from. So that's what I'm looking at on AUD JPY. Target clean sweep of this first point of the trend line and this prior engineered swing low here, or arguably this low here, clean liquidation of that. And if we do get a much more bearish price action, clean sweep of these relative equal lows, possibly a mitigation of this 4-hour sponsor candle here. So yeah, possible targets for swing trades. Last but not least, gold. A lot of people in the group been analyzing gold, catching very nice entries on gold, and again my bias is just built on the sort of hourly and 4-hour time frame. Looking at this on the, again, this was a previous 1-hour sponsor candle. Oops. So I do think we are going to see a sell-off back into this 1-hour area of 1-hour sponsor candle, and just look to refine out the body of that candle there. But I'm just going to use this whole candle here because it's in alignment with that 4-hour sponsor candle. Arguably this last down candle before the up move, hence why I refined it to the 1-hour candle. But if we just monitor this a bit more, this was the candle that ideally liquidated this prior engineered swing low. So again, this candle just flicking back and forth from the 4-hour to 1-hour. But yeah, just looking at this from the premium and discount side of things, I want to see price trade back into a deep discount. Ideally take out, you know, it's just sort of so many opportunities from a retail standpoint. As this is just clear support, traded into it once, into it again, had that bullish reaction. I believe we're going to sort of trade impulsively on the third time. I'm possibly looking for a sell-off on gold tomorrow during London, depending on price, what price gives me. But a couple areas of interest on the 4-hour time frame I'm monitoring. This inefficient pricing here, which we did to a certain extent rebalance with. So to the pip, yeah, we've rebalanced with that. Ultimately sold off, sort of created this retail liquidity here from a support perspective. So this is a retail support. Upon price building this sort of retail support, we know a lot of stops will be present within this area here. And again, where has price reacted off this sort of 62% retracement level? We don't really like to see price react off those levels there, more so the 70% and the 79%, as these are good areas to take longs from. In alignment with that is this 1 hour / 4 hour sponsor candle that I'll be looking for longs. But yeah, just understanding what's going on with price on the 4 hour and 1 hour time frame. We did have a clean, upon rebalancing with this inefficient pricing here, we had a clean raid of that prior engineered swing high here. Notice how we had a fail to close above this prior engineered swing high here, which signifies a strong raid. Upon that, in addition to that, we did have this sell-off here. Scaling into the hourly time frame, notice what we did after the sell-off, created this imbalanced price range here, and ultimately price looks like it's rebalanced with it now, and we're looking to mitigate with this sponsor candle here, and just drawing out Pacific sponsor candles. What we sort of can see is a mitigation after a mitigation after a mitigation. As we look to the left of the chart, we see this Pacific sponsor candle here, so arguably we have mitigated with it just by the wick, but nevertheless we have mitigated with that Pacific sponsor candle, sold off, created that new lower low, lower high, lower low. Arguably now we've created that new lower high from this high here to this high, this engineered swing high here to this engineered swing low here. We are trading back into a premium pricing, so I'm monitoring this. Possibly in London we can have one more push up to give us that mitigation properly of that sponsor candle there, and then ultimately look for a sell-off to take out this retail support and come into a deep discount on a 4 hour time frame back into this sort of 1 hour area of interest here / 1 hour sponsor candle, and then look for them swing longs to where? To ideally, I want to see a clear liquidation of these sort of highs here. Just sort of put on the 4 hour annotation. So yeah, it was this 4 hour area of interest here. I want to see a clean liquidation of this 4 hour area of interest here. The reason I say that, if we just sort of zoom into this price action here, we can see this was in fact the last up candle before that very bearish impulsive move. To a certain extent we have had a mitigation of it, but we haven't actually had a clean candle closure within that Pacific candle or sponsor candle to the right of it. So there's a target again, in saying that these do look like relative equal highs here, and we do have sort of some more inefficient pricing to rebalance with here, so we could actually fly with gold. And just looking at this on the weekly time frame from a structural point of view, just going to remove all the annotations for a second. Again, we are reacting off this weekly sponsor candle, this last down candle before that very bullish impulsive move. Notice how no bear candle was present within this whole bullish move here. So that is a very strong indication that funds were long within this area here. As long as this low here, this engineered swing low, is stayed intact, we are going to see higher prices, arguably a new higher high on gold, as these are relatively equal highs on a weekly time frame. Engineered swing high here, engineered swing high here, possible mitigation. So all the business within this area here has already been done. The only thing left is to liquidate this engineered swing high here and all the fund stops, not retail but fund stops, that are present above this high here. So we could possibly be looking for a new higher high and a massive swing trade on gold. That is it for the market outlook. I hope you enjoyed that. If you do have any questions on any of the currency pairs, drop me a message, we can talk about it further. I noticed some of you are smashing it even for a Monday. Keep going. You know, seeing that work, seeing the chart work, seeing the entries is very motivating for myself. So yeah, keep smashing it, and let's have a killer week. Let's catch some pips, let's catch some high RR trades, and let's bag that percentage. Thank you for watching, and I hope you have a good day.